Good evening, everybody. I'm Pierre Roberge, the Daily Trader. It is September 7th, and we are going to take a look at Tesla stock from a technical analysis perspective. My goal in doing these videos is to help you understand how to use technical analysis to make better trading and investing decisions, but I'm not a financial advisor, so please do your own research and make your own decisions. So Tesla up $9.28. It's been a while since we've seen that. 3.38%. Post-market, we are down by 49 cents, 0.17%. Let's look at what we have here on the chart. So on September 1st and also September 6th, we had a bottom here. So Tesla made a bottom with a nice wick at the bottom right here, a nice wick here, a nice wick there. So this was an indication that we were finding buyers that were willing to buy up the price at that level. So basically, this is what support and resistance lines are. There's no magic in those lines, but those lines represent an area where significant people are willing to buy the Tesla stock more than when it is a little bit higher. So this is just an indication of where people are reacting to a lower stock price. This is what it is. This is what it is. And that level of price buying changes based on the news, based on people's own objectives and goals and everything. We had closed barely within the downward channel. This is the downward channel. We are still in the downward channel. We are still in the downward channel. We are just bouncing nicely on that support, and look at how precise the support is. The support is right smack on our line that we had drawn before. There's no random movement in the stock. If you see a random movement in the stock, it's just because you have not identified the right lines that should have been there. So nice, very powerful green candle, and I like to see the fact that we don't have much of a wick at the top. It's just a big move up, and the buyers just bulldozed the sellers. So this is nice to see. But from a daily perspective, it does not mean that it's the time to buy Tesla yet. One candle does not make a trend. It's a really nice candle, but from a daily chart, we are still inside this downward channel, and we should not buy anything. This is just a regular principle. We should not buy a stock that is into a downward resistance. This is a downward channel, and we need to wait until we break this so that we are going to be outside of this downward channel and resume the move that we should be doing inside this bullish channel. Right now, there's nothing to do on the daily chart because it's not ready yet. Let's look at the hourly chart to understand how this happened. So this was the first candle of the day right here. We came and went back down to this channel support. It's always nice once we break a resistance. This was broken on the 1 hour chart, that we come back and test it and make a low, and then we are launching from it, because the stock market is moving in waves. And so this is a wave, this is another wave, this is a wave up, this is a wave down, this is another wave down, this is another wave down, and now it's a wave up. We come back a little bit, and then a wave up right here, a wave up right here. Basically, each time we have a little bit of a pullback and the stock goes back up, this makes a low. And when we draw our resistance line and support lines, we need to have a low, and now we have one. So we can say that on the 1 hour chart, this is our new bullish channel. So I can draw this because I have one low here and one low here, and previously we had another one here. This low made us draw this congestion zone line, let's say. But here, this low and this low is making us draw this bullish channel support. And once we have a support line, we can always move it back up like this to form a channel, and it always fits. And this is the channel that we are in. And we can understand that in hindsight that we have been into this channel since September 6th. The channel started September 6th, but it was not really clear to us because we were missing this piece of information right here that we had this morning. But now with this piece of information, then things just appear and are all of a sudden clear. And on the 1 hour chart, we have a stick at 99, super strong. We have the 2 lines of MACD coming back up. We have RSI above 50. We have DMI that's green. So everything is all green on the 1 hour chart. So on the 1 hour chart, the first play was to enter here. The stock was stuck at this resistance right here. And once it broke during the day, so this was the entry point. And if you entered at that point here, let's say at 276, now you have a $7 profit on each stock, and we might keep going on. You could now do a stop loss right here if it comes back lower than 280.55, a support that we had. If it crosses that, then you can say, okay, I'm going to take my profit here because maybe the stock is going to go down. This is how we play on the 1 hour chart. We wait for a pattern, and once that pattern has been broken with a good stochastic as always, then everything fits. It's just a move and we enter and we catch a little bit of a wave. This is like surfing. We don't need to understand why is there a wave right here, right now. Surfers don't know why. They just see it and they hop on it and they take a ride. That's a very different type of investing or trading, if you want to call it that, than looking at the value of Tesla as a company that is creating cars and that is making so much money, and the stock is undervalued because the stock should be worth this much and it's not worth that much right now, so I should buy it because in theory it should be worth more. Yeah, this is all nice and dandy, but it was still true on August 15th. Everything I just said about Tesla, about the revenues, everything, it was still true, but look at what the stock did. This is my opinion. It's of no use to have a theoretical framework to value a company when the stock price is disconnected from that theoretical value. The theoretical value of a company is great and everything, but if it does not directly correlates with moves in the stock, then to me, I feel like it's not that useful. It could be useful in the sense that Tesla stock should be going up in the future because the company is growing at a great pace. But I still don't want to put my money at $1,200 and then leave it there until it goes to 600 pre-split. I don't want to do that. I want to catch waves, and it's those waves that is making me money. It's not the theoretical Tesla stock price. It should be at this price. I have the truth. It should be at this price. You might have the truth, but we are buying shares, and the shares are behaving radically compared to your theoretical model. So I prefer to look at the patterns there in reality versus a theoretical model. There, preaching over, rant over. So if we come back on the daily chart, so stochastic is climbing up, of course, because of this. So we are now at 36. We still have one of the 2 MACD lines below 0. We have an RSI above 50. So RSI is coming back up a little bit. This is nice to see. And the DMI is still not there yet, but if we keep moving like this, so maybe Tesla is going to be a buy on the daily chart, maybe this week or at the beginning of next week. Well, thank you very much for watching. Thank you for liking, commenting, subscribing. If you like what I do, you can become a YouTube member. Click on my TradingView affiliate link. I'm going to wish you a great evening. We are going to talk tomorrow, and I'm going to tell you à la prochaine.